Welcome to Pressure Point. Our topic is Nvidia earnings, and as of this recording, which is shortly after the conference call ended, shares are down about 1.5%. They rallied back after being down about 4% when the numbers initially came out. I'm first going to talk about what doesn't matter, and then I'll jump into the pressure point. What doesn't matter is what they reported for the October quarter. The $35 billion in revenue met the whisper number. Equally as unimportant was the guidance for January. The midpoint of that, or the guidance was called for $37.5 billion in revenue. The whisper number was $38 billion. That is a fractional miss. That is something that when you have a hyper scrutinized story like Nvidia, we do care about those fractional changes. And another piece was gross margins dipped a little bit more than what people had been hoping for in terms of guidance, expecting a slight decline from October to January. As I mentioned, I don't think any of these ultimately matter. I think what matters is what's demand going to look like in 2026. The reason why that's so important is that this, of course, is a boom or bust business. And I've talked before about how in the quarter before all this generative AI excitement started, NVIDIA's business was down 21% year over year. Since then, of course, it has been on fire, going from $125-ish billion company to call it $140 billion run rate. And so what matters is calendar 26. So how do we get a read on calendar 26? And that's what I'm going to hit the pressure point here, which was commentary around Blackwell, how long demand will exceed supply. And look no further to the CFO commentary letter, which came out with earnings, and they outlined that they expect this to continue for several more quarters where demand for Blackwell is exceeding supply. They also referenced some supply difficulties, and when you net it out through the commentary on the call, is that those tend to be pretty small. They're related to all the partners that they work with to try to get these data centers up and running, as they can have some changes how they roll out that can impact NVIDIA's business. But ultimately, they're seeing what they refer to as incredible demand for what's going on with Blackwell, and again, will be supply demand constrained for the next several quarters. So probably put that mid next year. Compare that to commentary from the October earnings call when Jensen talked about the supply to be in demand to be constrained until into 2025. So we're going from into 2025 to call it mid to 2025. I put those two together and believe that this is a positive sign relative to Blackwell demand. They also mentioned twice on the call that demand for Blackwell is higher today than what they had thought it was going to be 3 months ago. And so that doesn't give us full visibility into what demand looks like in 26, but it does set up 25 to be a strong year. So that's the pressure point. I want to even kind of take a further step back, which is kind of driving all of this, are these scaling laws. And the first question was really got to that and wanted to get the company's perspective on what's going on with scaling laws. And at the highest level, for those of you who are new to this conversation, scaling is what is effectively needed to improve AI today. Essentially, you have to throw more compute at the problem to get the models to be smarter. And there's been talk more recently that in the future, is these models, for them to generate inference, that they may not need as much compute power to get there. And that, of course, as I mentioned, was the first question on the call. Jensen gave a long answer, talked about 3 different ways to scale, but the substance of it is that I think that we should look at, use as an analogy to this scaling conversation as Moore's Law. This, of course, was the idea back 30, 40 years ago, where the CPU speeds would effectively double every couple of years. And ultimately, there was a belief that that would not hold up, and it's held up pretty well. And part of the reason it's held up pretty well is that there's just been these unexpected findings about how to improve the CPU capacity. And I think we're going to see something similar when it comes to scaling in AI, is that we'll find new, unique ways to kind of improve what this hardware can do, which will continue to motivate the industry to abide by the scaling laws. And when you put all that together, it basically means that demand for Nvidia should continue to be robust as these scaling laws, what we believe, will continue to hold up. So if you bring all of this together, my sense back into that calendar 26 number, going into the call, the street was at 20% year-over-year growth expectations for calendar 26. I think that after this call, they probably won't change much, maybe go up a couple percent. I still believe that this is, for calendar 26, going to be a 30% plus grower. And well, I do believe that we will see a day where Nvidia slowly hits the wall, rapidly hits the wall. I don't think it's in the foreseeable future. I think there is still ample time for this business to appreciate in investors' eyes. And so that's the pressure point. On behalf of Deepwater, bye for now.